When foreign investors evaluate a new market, they often focus on the obvious factors: market size, economic growth, labor costs, tax incentives, and business opportunities. But experienced investors know that one factor often matters more than all of them combined: political stability. Because no matter how attractive a market appears today, long-term investments require confidence in tomorrow. If you're building a factory, establishing a regional office, hiring employees, signing long-term contracts, or investing significant capital, you need more than opportunity. You need predictability, and this is one of the reasons why Vietnam continues attracting increasing attention from foreign investors around the world. When a foreign investor establishes a company, the investment is rarely designed for 6 months or 1 year. Most investors think in terms of 5 years, 10 years, or even decades. A manufacturer building a production facility, a technology company establishing a development center, a retailer entering a new market, or a family investing in a business overseas. All of these decisions require confidence that the environment will remain stable enough to support long-term growth. This is why political stability is not simply a political issue. It is a business issue, and often a very important one. The world has become increasingly unpredictable. Geopolitical tensions, trade disputes, economic uncertainty, regulatory changes, and political disruptions have affected markets across multiple regions. As a result, many investors are placing greater importance on stability when choosing where to allocate capital. They are asking questions like, can we plan long-term? Can we operate without constant disruption? Can we build confidence among shareholders, employees, and customers? For many investors evaluating Southeast Asia, Vietnam has become an increasingly attractive answer to those questions. One of the reasons Vietnam continues attracting foreign direct investment is because businesses can often plan with greater confidence. When companies invest in manufacturing, technology, education, healthcare, professional services, logistics, or retail, they need a stable environment that allows management to focus on operations and growth. Political stability contributes to that confidence. It allows businesses to make decisions with a longer-term perspective, and long-term planning is often where the most successful businesses create value. There is a reason major international corporations continue expanding their presence in Vietnam. Global companies conduct extensive risk analysis before making investment decisions. They evaluate market opportunities, operational costs, workforce availability, infrastructure, and political risk. The fact that Vietnam continues attracting substantial foreign direct investment year after year reflects confidence from international investors. These companies are not only investing in Vietnam's present, they are investing in Vietnam's future, and confidence in stability plays a significant role in those decisions. Many people assume political stability only matters to large multinational corporations, but that is not true. In fact, startups and SMEs often benefit even more. Why? Because smaller businesses typically have fewer resources to absorb uncertainty. A startup entering a new market needs predictability. A small business owner relocating to Vietnam needs confidence. An entrepreneur investing personal savings into a new venture needs visibility regarding future operations. Political stability helps create an environment where businesses of all sizes can focus on growth rather than constant uncertainty. Political stability does not create success by itself, but it helps create the conditions that allow success to happen. Investment, infrastructure development, business expansion, consumer confidence, and international trade all tend to benefit when stability exists. Over time, this creates a positive cycle. Businesses invest, jobs are created, consumer spending increases, the economy grows, and further investment follows. Vietnam's economic development over the past several decades reflects the power of this cycle. Of course, stability alone does not guarantee business success. Investors still need to understand the local market, consumer behavior, competition, regulatory requirements, and operational realities. A stable environment creates opportunities, but investors still need the right strategy to capture them. The most successful foreign businesses combine confidence in Vietnam's future with careful planning and strong execution. For foreign investors evaluating Southeast Asia in 2026 and beyond, political stability remains one of Vietnam's strongest competitive advantages. It supports long-term investment planning, business confidence, economic growth, foreign direct investment, and market development. Combined with Vietnam's growing economy, young workforce, expanding middle class, and increasing international integration, political stability helps create a powerful foundation for future growth. This is one reason why more entrepreneurs, SMEs, and multinational companies continue choosing Vietnam as a destination for expansion. At LTS Law, we regularly work with foreign entrepreneurs, investors, SMEs, and international companies exploring opportunities in Vietnam. Many clients are attracted by the same factors: political stability, economic growth, market potential, and long-term opportunity. But successful investment requires more than identifying opportunity. It requires understanding company formation, investment regulations, licensing requirements, work permits, compliance obligations, and operational planning. If you're considering investing, expanding, or establishing a business presence in Vietnam, book a consultation with LTS Law. Because political stability may create the opportunity, but entering the market correctly is what transforms opportunity into long-term success.